What's up, guys? How's it going? Get started in a minute. What's going on? Turn this down a little bit. Yeah, this is that playlist that I was talking about the last few streams. It's definitely going to get me in trouble because this song is a well-known song, a well-known track. What's going on? Give me a quick sound check, and we will be good to go. Let me get rid of the music altogether. Good morning, good evening, good afternoon. It's just after afternoon, 12:01 p.m. Monday. Hope you don't have a case of the Mondays because it should be an exciting week. But I'll give you guys a minute. Pop open my bottle of Fiji natural artisan water. I don't know why I buy Fiji. I'm not even that big of a fan of it. I honestly like that. There's this bottled water that we have in our fridge at all times. It's got like a black label. It's got the electrolytes in it. Anyway, who cares? Sound check. Sound is good. All right, good to know. All right, guys, what's going on? Hopefully you guys had a good Easter. For those of you that celebrate. If not, hopefully you were able to separate yourself from the computer screens, get some much time needed away, some rest, reprieve. Not a whole lot going on, right? This is a good week, though. Ideally, this should be a good week. We have a couple different catalysts that are on their own pretty good for at least lower time frame price action for your day traders, intraday traders. And then again, we're still at what is a very important level in market structure. The most significant contextual level on the chart, unless you go all the way back down to right around 24, 25K. So a lot can happen. Starting with, well, let's get started first and foremost. So I'll say hi to everyone in the chat shortly. I'll take questions in a little bit. If you're not a subscriber, make sure you hit the subscribe button, hit the like button. Shout out to the partners and sponsors of this stream, Bybit and Crypto Watch. So for those of you that are watching the streams now, you guys see that I have enjoyed using this platform. I'm still waiting for them to integrate the ladders with all trading platforms. And once the ladders are up and going for the exchanges that I trade on, we'll be going back to what was the format for the last few streams. I think for like a month and a half, I was trading during the stream, and then we've gone back to a little bit more of the chart sharing. And I'm not really a fan of just streaming and sharing charts. I don't really think that, trading is not just marking off levels on a chart. I actually enjoy trading during streams. And for those of you that have been watching, you guys remember that I was trading the NQ and trading the ES a couple weeks back, and I was doing that during the streams, so during the New York Open. So this is a phenomenal platform, though. We're going to use this platform during the stream. We're going to take a look at just some important levels that I think are significant from a high time frame standpoint and for lower time frame trading opportunities as well. So we'll take a look at that. Shout out to Bybit as well. So if you're interested in using either Bybit or using Crypto Watch, the links are below. And Bybit is actually running another bonus program. And that goes up to, I believe, 35K. But, that's not just signing up to the exchange. That is depositing a significant amount of money and satisfying their trading volume requirement, as well as KYCing. And just a heads up, almost all exchanges that are currently available that are non-KYC are probably going to go the way of KYCing. So it would pay to get in front of that and go ahead and KYC in advance. I do understand, though, that people are, they enjoy some of the exchanges that offer the non-KYC access for, limited withdrawals and limited deposits. But I just think that given the way that everything's going, and this is just normal, and if like myself, coming from a traditional background, trading on legacy brokerages for forever now, legacy platforms, KYC is just, it's a given. And the KYC in traditional markets it's like a full-on rectal exam compared to crypto KYC. So if you want to sign up for a brokerage account, you have to tell them a lot more than if you're trying to sign up for, Bybit or, whatever exchange you're interested in using. So those links are below. Feel free to use any exchange, any platform, any software that you want to, but from time to time, I share the ones that I think are very useful and that I enjoy using. And I try to share new things as well to give a little bit of attention to people that I think are creating interesting and useful products and projects. Anyway, so let's talk about, let's get right into it. Let's talk about this week. What's exciting this week? We have CPI. So we have East Shanghai, right? I think it's going to be a non-event. So I posted yesterday, a little bit of a tongue-in-cheek sort of shit posting post about buying over the weekend, buying on Jesus Day, buying, into high time frame resistance, buying ahead of, major supply unlock, buying ahead of CPI. That was not that was not an entirely serious post. As you guys have known, my positioning now back and forth has been to be hedged, to be unhedged up here. I've probably incurred a good amount of fees just getting in and out of hedges. I haven't taken any directional bets besides some brief short-term trades. I actually long this morning. So we'll go over that. I closed that out for I think it was like a 150-point move. I mean, nothing. But there's not a whole lot that's taken place. We're still within a high time frame, multi-week range. The triggers for a break out of the structure are pretty close, so that's exciting. But the mention of the CPI, I think, is significant because I think that that's going to lead to some volatility. But the Shanghai unlocks, I don't think that is significant. Honestly, I think it's going to be pretty much a non-event, or if it's not a non-event, whatever the market does after it is probably worth paying respect to. So, well, if the market begins to mark down and we see weakness after that, I think that it's probably something that you want to side with and not necessarily fade right away. Or if the market starts to pump and show signs of strength after, again, same sort of idea. The idea is to react and respond rather than try to predict. I think it's always the best idea. It's how I trade. It's easy to be on Twitter, though, and to make calls and to, express your feelings every few minutes. But 99% of my trades are reacting and responding rather than trying to predict. And I think it's even sillier to try to predict, even though we all do it, to try to make calls 1 week, 2 week, 1 month, 6 months out. It's actually really ridiculous when you think about it. All the things that can happen, all the things that have happened in between the last few months that you were just unprepared for or not expecting or just weren't on your bingo card. So think about extrapolating on that into the future and how unlikely it is that you will have much success doing that. For example, like right now, markets are relatively calm. We had a move down from the open this morning in the NQ and the ES, but you don't want to sell within the first hour if you're approaching a significant level. We had a significant bounce off of that. Crypto's holding up, BTC's holding up, pullback in gold, dollar bouncing. There's not a whole lot that's taking place that's really that exciting, but what you might notice is there's a little bit more development when it comes to this China-Taiwan story, and that could be something that spooks markets. Some major development with that. Some, who knows? The United States getting roped into it. There was a post or some mention by Senator Lindsey Graham about us needing to send troops there to defend Taiwan. So things like that, are things that, again, are not necessarily on your bingo card. And those are the things that really fuck our plans up, right? So making long-term plans, trying to project too far into the future is pretty futile, or it's a fool's errand at least. So we have CPI on Wednesday. I think it probably comes in lower than previous, but anything that is higher than forecast, I think, is trouble. I think if we come in at forecast or lower, the market's probably going to pump. I gave my opinion on equities for the last week. I've said, the move up to 42 to 41.50 in the ES, I was done pretty thin on low breath. I think the market needed to pull back and build up some support. We're doing that so far. If CPI comes in at forecast or under, I think that the market is probably significantly hedged in advance of this again, like many times before. And the market looks healthy, honestly, right now. So price action is constructive. These moves are constructive. And again, if it's a matter of us coming in line or even better, then we're probably going to see that 42 number tagged again in legacy. I could see the NQ moving outside of this little consolidation and heading up to 1350. And then that means that BTC, being the sort of play on tech, as I've said before, crypto trades like high beta tech, probably just follows those benchmarks up as well. So we have CPI. And then importantly also, we have the FOMC meeting minutes released that are from last meeting. So we know last meeting was really important because that was during all of the bank contagion. So there is a, strong arguments made about them coming off or pivoting or the next hike being the last. And we'll get some more insight into that thought process when those minutes are released. I mean, I'm not making any kind of significant bets off of these events in advance. All I'm trying to do is identify times when we'll probably have some really good short-term trading opportunities. And I think that it's more significant now, that these are possibly more meaningful now than other meetings because, well, one, this CPI I think is definitely one of the most significant we've had in the last few months, last few quarters. But two, these events are happening. Everything is kind of lining up perfectly for a big move because of the way that volatility is compressed in crypto markets. So whether you're looking at Bollinger Bands, average true range, your 30-minute candle range average, your daily candle range average, your value area range average, standard deviation bands, all those tools that you could use to determine how compressed volatility is, they're all pointing to these same results, which is that everything is really tight. I had to change my tick setting for my TPO charts again. Because of how tight, I had to widen it up initially because we've had a really strong trend up. And then I had to compress it again just because the days are so tight. I mean, if you look at, for example, we'll go to BTC's TPO chart. BTC, the average true range, that is the average 30-minute candle range size, right? So your ATR of a 30-minute bar over time, right? So it's like 12, 14, look back, 24 hour for a day. So that's 77 right now, 81 yesterday, 53, 74, 107. This is in double digits. That's bad, right? That's really tight. Anytime that you have double digits or just any kind of compression like this, you have to start to assume that the significant move that takes us outside of that is going to be the one that possibly gets a larger move going, right? If you have a larger impulse, if you have an imbalance move, it's not the case that you might want to fade it and expect that price is going to continue to mean revert. Compression leads to expansion over time. So if you look at ETH, it's the same story. The average true range over a 30-minute candle is between 5 and 7, right? So it's 5 and 7 points, 50 points for BTC, 80 points for BTC. That's terrible. I mean, if you're trading this right now, just to give you an idea of how you might look at that, if you're trading this right now and you're capturing like a decent portion of daily ATR, or you're capturing moves that are 2x the 30-minute candle ATR, so like let's say today's ATR is 77, and we get I caught a 150-point move, right? I think it was 150 points. We're gonna take a look at that in a second. That's 2x the 30-minute candle ATR, so not bad, right? So I've caught a multiple of that ATR. It's a decent scalp. It's a decent intraday trade. If you can capture 300 points in a day, if you capture 400, 500 points in a day, when you have a day that is this tight, that is double digits, it just helps you put things in perspective, right? If you're in a move that is, into an extreme and there's no real reason for change, or there's nothing that really stands out as the market, potentially shifting, and you have a move that is 80 to 100 points into an extreme and not through, well, then maybe it's the case that you want to fade that because that is kind of putting in what is expected for the day or for that rotation alone. So averages are good because they give you some kind of norms to work within and to, again, put things in perspective and ultimately to help manage or take trades around. So CPI, the FOMC minutes, and then ETH Shanghai. So we'll take a look at the chart real quick. We'll go to Crypto Watch. I have a few boards and they're all available. So these are all in the Discord. It's a free Discord. Bybit, Binance, same story. In the last 24 hours, we've had a significant pickup in open interest. Both of these are on positive funding. I don't want to say right away that this is something that you should immediately fade, because I think after this type of compression, if we do have a compression like this structure over the last couple of weeks and we end up breaking out, we're going to really be liquidating one side of the market quite significantly. You're probably going to see funding blow out in that direction, whether it's negative or whether it's positive. But I think more importantly, in the last 24 hours, is just the idea that we've put on a good amount of risk. So whether you're looking at Bybit, whether you're looking at Binance, it's the same story. Let's go right to just sort of a bird's eye view. So again, not a whole lot has changed. This is starting to look more and more like that 2019 structure. So going back to this, we had talked about that during the last couple of streams. I mentioned how this had a little bit more of, I guess, signs of strength because there was more positive drift in that. But the same idea, it was at a major level, the most significant level. A lot of people managing trades around there, taking some off, shorting it in advance, and then we ended up blowing through. So a slight difference in how we're sort of floating up in this move. Again, context is completely different, but this is the more time this spends floating higher, the more likely I am to get bullish. I mean, it just kind of indicates that we're accepted more than anything else. I've been talking the last few days about, making fun of bulls and talking about getting some type of pullback. My high time frame bias is still bullish. I am just talking about whether or not we come back down to, what is maybe 26, right? Or 26.5. We're not talking about an entire reversal of the structure. I still think that as long as stocks go up, that I don't see any reason why BTC wouldn't follow, or ETH wouldn't follow. But high time frame wise, I think there is an immediate setup. Even though this has been really boring, it's not like we can't really look at this right now and say that a whole lot has changed, right? We're still within the range. We do have this kind of positive drift within this structure where we are floating higher. That hasn't necessarily meant that in the past that this is just a flag that is going to expand upward. We've had sort of periods like that in the past where the market has sort of grinded upward, melted upward, and then we've had a final spike and then reversal. So for this, I think that there is a good short-term trading opportunity that happens to lie within the weekly structure that we currently have. So we will just line this up. Actually, I already have this. Let me set these up to this chart. Where is it? Hold on one second. We'll go back to here. There we go. Oh, it's on Coinbase, so we'll go back again. Just want to make sure that I have because the drawings are attached to, one sec. There we go. So the current setup right now, right? We have this gray box still. So this is, we're going on over 20. This must be going on 3 weeks plus now. I mean, obviously 3 weeks plus of this composite being really clean. So what we're talking about is 70% of the trading, 70% of the activity, and the time spent between roughly 27.2 and 28.6, 28.5. So it's a 1,000 point range, right? Plus a little bit more. So this is where price has been accepted. This is where it hasn't really made a whole lot of sense to make any meaningful decisions, meaningful changes to positioning. Hedging moves towards 30, towards 29, buying dips lower at 27. Both of those, there's good arguments or good cases to be made for that, just from an extremes standpoint. I only really like to get involved in extremes. When you're in the center of this, it's just the ripest area in terms of liquidity, right? But it's also the area where you could get just the most flat-footed, right? From a risk reward standpoint, it's like, it could go one way or the other. Markets are a coin flip many times, so I don't know how you could be that certain of anything if you're smack dab in the center, versus seeing an extended move into an extreme, seeing positioning get caught offside, and then playing some kind of reversal or counter trend move to that small move back to the center of the range, back to something like the POC. Or just mean reverting back within value. So there's a couple things that are favorable right now. Should we continue to drift just a few points higher? And a few points means, we are talking about, let's see, let's zoom out a little bit, because when you zoom out on CryptoWatch, it's actually good. You could, whatever the high and low point is on that window will be actually labeled. So the inside week structure. So we have an inside week setup. So this week, last week, finished out inside of the prior week. And mind you, even without that, we could just see that this whole area is, there's a pretty clean range that's forming within there. But inside week, the benefit of an inside day or inside week structure is that when you get the break of that structure, there's a lot of algos and even discretionary sort of mechanical traders that will take this as just a purely mechanical trade. So this occurring after a period of compression like we've had at a major contextual level, and let's say it occurs upward, I think that there's a possibility that we get overextension higher. So that weekly high, that weekly low is a trigger. And ultimately what that means is what we're looking at is 28.8, which is only, again, like we're looking at just over 400 points higher. And 27, excuse me, that other weekly level is 27,228. So a break outside of that is kind of like your no fade zone. If we just look into it and we see that, there's some funny business taking place at the level, then maybe you have another fade opportunity. But in my opinion, if this is shaping up to, and it's looking semi-constructive right now, if this is shaping up to melt through there, so we're just kind of going to grind towards that level. If we accept above 28.8, then not only are we outside of that weekly structure, and you might see a significant pickup right through that threshold, but then we're also clearly above where the last 3 weeks value has been established. Last 3 weeks value, and then not for nothing, the value area high of that structure coincides with the actual daily highest print for this entire range. So daily highest print, relatively the same area, not print, so I don't mean print, close. So daily highest close, making new weekly highs already. We're above last week's close. So there is this kind of drift that's taking place, and it's drifting now and consolidating at a major level. So it's called the drift to death, right? It gives you a lot of time to enter in and to sell the level. And then a lot of the times what actually happens is this actually rips upwards. So that's what I'm looking at right now. It's starting to drift towards that level. I am still hedged right now. So what that means is I have a good amount of my spot that's hedged. I have not sold that. I've just hedged it with futures. I'm not hedged entirely. I'm not hedged entirely flat. But if we're able to break above 28.8, and we see that for whatever selling comes in, that the market is remaining bid, and you could look at whether we're looking at the tape, whether we're looking at a footprint, whether we're looking at signs of absorption over, maybe the portion of a session, a few 15 minutes, half hour, hour plus in CVD, maybe seeing book support. So maybe we break that level, and then immediately we're just seeing that this thing is stacked and the ask side is gone. Sign of acceptance could be just constructive price action. Could be a series of price making a set of higher highs and higher lows in the lower time frame. Something like this is constructive. So this is actually where I longed this morning. So I longed this pullback right here, and I closed that out at, so that was actually a 200-point move because I couldn't remember if it was a 150 or 200 points. I actually closed that out at 28.4. But this is constructive. So honestly, let's say, for example, we're above 28.8. And then what we want to see is the price is just continuing to build value. So we have a little bit of a range right here that's forming. If you get that and you still see that that's continuing higher, so let's say we continue to mark up, we're above 28.8, we're forming some kind of consolidation. Maybe we do like a classic little swing failure in the low time frame, and then we're back above that the highs of that consolidation. Then I would call that constructive, right? We're capturing sellers below. We're consistently remaining bid. If we were looking at something like a footprint, for example, like let's say that 28.8 level came, it would kind of look like this, right? You might have price accepting above the region, selling coming in. So ideally you would see selling coming in, so the left side of the structure be populated with a good amount of volume. And then as the market slightly drifts higher, that we continue to trade above new selling. So for example, like it's a good amount of selling that came in here. The market is drifting slightly higher, but now here we are at the low portion of the structure trading below this new selling. So ideally you want to see, if we had a colored candle might be more obvious. Ideally, you want to see that the market is just remaining green above selling, right? And that is remaining bid. So the buyers are chasing this up, and the market is remaining bid higher for each selling that's coming in. Even if you had, like, let's say, for example, you had more selling, that'd be an even stronger case. So imagine that there's like 10 million contracts here sold, price drifts higher, and then we're talking, if this is negative 10 million delta on, like, let's say 20 million volume, and then this is negative 20 million delta on 30 million volume, right? And we know that from a left to right transition, this is now drifted higher, and actually there's more volume that's come in. And if there's more volume that's come in and there's, we're drifting higher, that doesn't make a whole lot of sense if there's more sellers that came in on the right side. So price action, flow, presence. So price just remaining present above 28.8, no immediate rejection. All these things would be really good. And again, that's an inside week breakout. So there's a really strong case for continuation after that. Miss anything? So I didn't want to hold this position through there. I mean, arguably might have been a decent hold, but I'm used to this thing chopping around by now. So when I caught a couple points, I figured, let me close this out and I won't hold this through the stream. All right, so let's look at real quick. All right, we'll actually look at, one sec, the NQ, because I think the NQ is a good chart to take a peek at. CME, so very easy, CME, and then NQ. So I had mentioned, and I was using the ES as an example, that this move was mostly, most of the S&P is Apple and Microsoft. So what we want to see is that market breadth is healthy with any kind of new move, or change in market structure. If we're going to make a case for this being, a bear market shifting into a bull market, that would especially be the case. If we're going to make a case just for a break outside of this multi-month range, you still want to see the same thing. So again, 4,200 is the level. 41, 42, multi-month, talking 9+ month consolidation, no close through there, no major presence through there. That is the level. So this move into the level is on its own a good looking move, but when you consider that it's on limited breadth and there's not the whole support of the market behind it, and it's overextended on, for example, if we look on the daily, it's a little clearer. It's overextended on the daily time frame. It's into the level. We're just expecting some kind of consolidation. I mean, a healthy market is just going to build value higher. So we're going to pop up, consolidate, pop up, consolidate. If anyone has been around long enough and was paying attention to the S&P before it became popular in crypto, that's how the S&P moves. It just kind of drifts up over time, pulls back, scares the shit out of people, consolidates, pops up, and just continues to do that ad nauseum. So that's kind of what we are looking for right now. The best case scenario is honestly that we hold this 4K level. So hold this 4K level, consolidate here, and then honestly, if after this consolidation we're marking up above 42, that's it. I think that you have everything behind you that you need to be bullish. I can't see the market faking out. It's not a shit coin. So 4,200, you're above the 200-day moving average. You're outside of this running diagonal. You are above multi-month resistance that you've been unable to close outside of and gain exposure outside of meaningfully at all in the last year plus, meaning this year to date and then into last year. So it is actually, it's under a year's time. But so that is the ES, but the NQ is actually more correlated right now. So BTC is more correlated to the NQ. Correlation coefficient is like, I think it's a 0.89. So positive correlation. If the NQ continues to mark up, all I want to see with the NQ is honestly holding high 12s. So 13 is a significant level. Most of the volume was done there this morning. So we'll actually use this. I forgot about this. 13. So this is just a 4-hour chart. But that 1300 level is quite a significant amount of volume that was done there today. But not for nothing. It's not the case that if we lose 13 that it's over. I think that the NQ has a little bit of breathing room going down to, as you can see, that I've marked off 12,904, sort of the high 12 regions. Into this daily, what was ultimately a high time frame resistance going back to February. So we're holding that level now. 13 held. Honestly, this move this morning, it was occurring before 10:30 a.m. That's not something you want to join, right? So we had a consolidation, strong breakdown into this dollars moving up into a major pivot into that level again for the second time. 1300, 13,000 level, major level, and early in the morning. So not something you really want to join and expect. Like, it's very rare that you're going to see that something like that just continues down. So this level right now, catching a bunch of sellers offside, you have a big pop. Honestly, developing here is more bullish for crypto as well, right? So continuing to move sideways above 13, continuing to consolidate. You could see BTC begin to run without this. You could see, majors begin to run behind BTC and the market to start looking really good again if legacy is going to hold up. So real quick, go back, look at the TPO charts. So here's BTC. So I mentioned not only are we now, so that weekly level, so we have some time to go. So it's right there. So there's that inside week break we were talking about. So that's a level where things get pretty juicy. The level that we're having trouble with right now, it makes sense, right? So this level was a higher volume node going back to, that is April 4th or April 5th. I think that's 4/4, right? Depending on this time frame setting. So that high volume node there, that's a sticky point. I mean, accepting above this composite right here. So you have a 3-day composite, bigger picture. There was a larger range carved out. So we had a much wider range, a good amount of dispersion leading up to where this compression occurred over the weekend. I mean, this makes sense into a holiday weekend. Friday was, a half day or a quarter day. So right now we're accepting back towards the higher end of the range. I could see this pushing up, continuing to push up to even slightly below that weekly structure, and then maybe giving it a little bit more of a pullback back down to where today opened. A lot of the times we end up taking the Monday open. So, into Tuesday, this is something that's pretty actionable, and depending on the move that preceded it, even more so if it's an overextended move. So if we had, for example, let's say that this put in a single move up, a moonshot, a thin moonshot, short squeeze above this weekly level, and then we're drifting around on Tuesday with no signs of life. Well, a lot of the times today's open is going to end up being one of my targets. So weekly close, Monday open has a pretty good level to return back to and clean up. And that doesn't mean that this continues, just reverses at that point. A lot of times you could see that level is just returned to, and then the market continues to mark up. But that 28.8 level, that's our weekly level. As far as today's structure, I mean, this is looking good. Locally, it's looking really good. If you look at, again, this 3-day composite, it's more like a 4-day composite because most of the value for the last 4 days established between 28.1 and 27.8. So break outside of there, strong move out, and then establishing value, and not only establishing value, but we're trading above it and holding that level. So just back within prior value from that big day on, again, that was on the, is that the 5th or the 4th? So this, I don't know if I fucked up this scale down here as far as the time zone, but looking good so far. Honestly, as far as like, if we're looking at this and, considering a possible fake out, this 28.8 level, so that weekly level, honestly, the only target that I'm really considering is 30K. So if we break outside of that 28K level, I'm just back up. So that, go to a different one because Binance is going to be the ones that's responsible for most price discovery. So there, we're tapping at the level right now. So even more importantly, again, this high time frame level that we're all talking about, we're consolidating against that right now. So there's no real sign of rejection right here. It's just high time frame resistance until it isn't. there are many times where I will just buy resistance, but I think that being that weekly level, that weekly trigger is so close, waiting 300 points is not something that bothers me. Sort of just the cost of doing business. But if we break above that level, I think that you still have, again, what we're doing is we're basically just accepting back into this area where value had previously established, and your midpoint is right around 30K. So your mid, and it's also your POC. So ultimately accepting back within that little range that we formed before breaking down from those from those prior summer lows. If we break outside of this weekly consolidation, so if we get that inside week break, drifting higher, and we're able to accept above that level, I think that you at least have a move. I think it's more like, I front run levels all the time, so 30K seems like a reasonable target, but I would probably sell between 30 and 29.6. So not a massive move. We're talking under 1,000 points, but it is, in my opinion, a move that has, a high probability likelihood of occurring favorably. Outside of that, if we get something like this, let's say that we pop up, we have some kind of overextension, and then we're back within this range, I wouldn't sell that right away. So I want to talk about this real quick, because there's a lot of times it's a misconception that, you break up, take the highs after this kind of consolidation. If we break down and we're failing to hold above, that this has to mean that a larger markdown's coming. I think that those things you have to monitor in progress, because there's a lot of times where it'll do something like this, pop up, take some stops, and then next thing you know, you're just back at the level. And then this, more often than not, is just going to lead to continuation. So I would watch for that. Not for nothing, there's not a lot of things that could make me outright short. So just to clarify, I'm not shorting anything when I say I'm selling. So when I'm selling futures and I say I'm going to TWAP into BTC and ETH, that's just getting hedged, right? So I have underlying spot exposure that I'm kind of just removing those deltas, right? I'm getting delta neutral. I can't really see any reason right now why you would short outright. So like, let's say you weren't even exposed to flat and you're thinking, I'm just betting against this market right now. You need equities to move down. You need spot sellers to actually sell. So BTC, there was some large passive sellers up here, and I went over that, talked about that possibly being jump, and that possibly being larger institutional types that are just going to sell a major level after this much return, right? Just, it is a sort of a business process that they, have to, I don't want to put it that way. How do I put it best way possible? There's no way that they're just going to gamble on the level breaking, right? So they'll remove liquidity here, they'll remove positioning here, and then reestablish positioning if we're back above 30 and the book is favorable. So you do have those types that are going to sell regardless of how optimistic their belief is in the long term, just mechanically, because the level is, again, maybe they're up 100% already, on something that's very liquid, and it makes sense for them to remove that risk. So I can't see, aside from hedging a level like this and managing an area like this, I can't see any reason to take outright shorts. So I just want to clarify that, right? Outright shorts meaning place a directional bet that this is going to break down and not have that sort of hedged with any other deltas in the spot market or in the futures market. So getting, not being flat and hedged, but actually taking a position betting that this market's going to break down. I think I just repeated myself. Sorry about that. There's no signs right now that the market is really weak enough to do that. I think that intraday you have those opportunities, but I'm talking about from a swing standpoint. So even if this marks up, we get that inside week break, right? We're above 28.8, we break towards 30, and then we get some kind of nasty wick. A lot of times we'll be left with something like this, and then this will just continue to grind upward. And this is not any kind of, just because it's a textbook swing failure or liquidity grab or whatever you want to call it, people are going to think that means that we immediately have to come lower. I think you have to just monitor this closely, honestly. As far as any kind of larger short opportunity, I think that probably comes if you accept below these clean ranges that we have formed more recently. So honestly, it would mean, and this is just local, this multi-day composite right here between, again, 28.1 and 27.8. So yeah, if we're going to mark up higher and then trade back in the structure and then start accepting below here, let's say that we take out these lows and we're back within this range, and then we're treating the top side of that value area high as resistance, well, then maybe you have some more short opportunities, in that direction. And then other than that, I mean, it's possible that, I guess, if we got the complete destruction of this structure, so mind you, if we start accepting back below 27.5, it's the same level from the last streams, honestly. It's like nothing has changed. If we start accepting below 27.5, then yeah, I think there's a reasonable case to be made for revisiting this swing low. But we're not there. It doesn't make sense to devote a whole lot of mental bandwidth to thinking of that outcome. I think that what's presenting right now is possibly that inside weak break, so you want to be on top of that. Let's see. Just something to be mindful of. You're starting to see again some aggression come into the futures market, but in both directions. So for example, I think we were on and off negative funding. We've been on and off negative funding prints for a while now, which is what makes this structure one that you also don't want to just prematurely completely bet against. The spot market is still leading in that sense. So if we look at, I mean, you have a good amount of risk, like I said, but it's coming both ways. You're going to start seeing, when the market continues to mark up, you're going to see longs get aggressive in the futures market, and it's not going to be necessarily a case that you should just reflexively sell it, right? So if you see Bybit, funding print start to go positive, you have to have new baselines for these strong moves, right? So it can't just be slightly positive. It has to start to get blown out. So as you can see right now, Bybit, this is across, this is averages. We're starting to go negative again. Let me drink some of my water. Bybit is negative. Huobi is negative. OKX is negative. And you have to start paying attention to OKX because a good amount of activity has left other exchanges and gone there. So that's exactly what you want to see for BTC in a move that's grinding upward. In an alt, if you start to see really negative funding prints, some people think it's just continued squeeze fuel, but it's not. There's a lot of times when sometimes that futures market gets so heavy and you still have spot buyers coming in. And, especially if you have structure to support it, like some kind of 3-drive structure, and you might have a funding print that's like 27% annualized, and you think that means that we still have further up to squeeze, and it's the opposite. It's a sign that sellers are just overwhelming buyers. But in BTC and ETH as well, I think that you take this as, people just prematurely fading this move. So a good amount of risk tagged on Bybit. So just looking at open interest grinding upward. And then the same can be said for Binance as well. And again, I understand. So as we get closer to breaking, you're going to see longs chomping at the bit too, right? You're going to see people trying to add exposure on the long side using futures. And again, it's going to blow that negative funding is probably, it's going to continue to do what it's done, which is to be negative for a very brief amount of time and then to get reset on just a couple big buys. As far as ETH goes, like I said, I wouldn't try to predict. So predicting meaning, it's going to be a massive sell the news event. Oh, it's going to be a massive buy the news event. I think you just want to go with the direction after the event. ETH from a market structure standpoint, high time frame market structure on the weekly. It hasn't broken out like BTC. So it hasn't even tested this high yet, going back to August. But remember, it didn't put in a new low. So looking from this standpoint, like contextually, from the risk reward standpoint, it's, if you're thinking that the markets just continue to move sideways and range over time, the closer we get to this level, the more this becomes from a contextual risk reward standpoint, an attractive sell. I don't know if you want to hold that though. I don't know if you want to just take that first opportunity because Again, if BTC is going to continue to mark up, you could just expect that this level as well is going to give way. Locally on the daily, there's no real signs of weakness besides, dips in momentum. So that's going to happen though, right? The market doesn't continue to just move one-sidedly, or BTC actually does, but then when it does cool down, it takes a while, right? So you don't need an RSI to see that momentum cools off. You just need to see that price action is really congested and it's consolidating over time. But on the daily, this is actually a reasonable long opportunity. So you can make a case for this being that breakout of this multi-week composite. So similar to BTC structure, except ETH actually broke out and held, which is one of the reasons why I was initially bearish and hedging more aggressively, was that ETH broke out, broke back down, BTC didn't follow at all, and then you have the rest of the market that wasn't moving up at all either. But now BTC is looking good, ETH is looking good, Legacy is looking good. So this level is arguably a decent long opportunity up to that 2000 level. And I think that's I think that 2K level is a major selling point, honestly. And to be fair, you could just define this based on market structure. I mean, I don't just play stops around market structure a lot of time. I'll take into account volatility. What is necessarily defining my thesis might not just be market structure. It might be some high volume node or positioning that came into the market. It might be based around open interest. It might be based on where ETH/BTC is trading in relation to market structure, on its own market structure. But for this move, because this is a clean retest of multi-week value, I think you could just place a stop below this low. Again, not financial advice. This would be how I am positioning. Decent opportunity, I think, at least back up to this high. So we're talking about, almost 100-point move, and beyond that up to 2K. I don't think you want to get too aggressive at 2K. I think you want to, it's sort of the same idea as the S&P, moved up into its major level. It moved up pretty straight. And you want to see it just continue to build value higher, sort of like what it's doing locally. But for all intents and purposes, it looks good. See if anything stands out. Now, earlier this morning, there was some interesting activity. There was a good amount of spoofs that were in the offer, which is a good sign if you're a bull, honestly, because very rarely do those actually have intention of getting filled. But I haven't seen them since. If we start to see that at the level, I think that's probably something I would long into, honestly. I would gladly help them get out of their position or into their position, because I think it's very unlikely that we see that doesn't do what it just has. That's usually an indication that someone is trying to spoof the market down lower, and then a lot of times we end up ripping after that because they're really just filling orders. So there we go. We got the move into 28.8. We're just under there. So something like this. So I was talking about the idea of overextension into an extreme, whether or not you're overextended or not overextended, using ATR. So one of the things that you use ATR to establish some kind of norm, right? If I'm someone who likes to trade at extremes, and I'm looking at an environment that's ranging and is one that's more favorable for mean reversion approaches, at least in the last couple of weeks. If we move into an extreme and we're already at the day's ATR, or if we're 30 minutes into a move, we're already past the 30-minute rotation size. There we go. Let's see. A lot of the times, if we are overextended into a level and there's no real reason for change, then I will, let me just removing hedges on the other screen. Then I will fade that move. If there's no reason for anything new if there's no sign of anything new, and the market has already just overextended into a level, and we already printed that day's ATR, then a lot of times I will fade that. If we're just kind of grinding into a level and we are slowly building value and we're kind of moseying our way into a level, that is not something that I fade. So we were beginning to do that over here. This right now is kind of, so I haven't actually removed hedges yet. Sorry, I'm setting my other screen up. One sec. If we just straight shoot into the level, sort of like what we have right now, I'll probably give this a little bit of time to develop. Now, could this just absolutely squeeze and rip up? Yes. But given that the move is very extended right now and we're getting some short squeezed out, I'm just going to give this a little bit. If we get some type of pullback, go down to just a tick chart. If we see selling coming in right here, so in this pullback, decent amount of selling, but nothing standing out. We'd already just squeezed out a good amount of shorts. So not something I would chase until we see some kind of selling coming in above 28.8. And we're building value. Yeah, I'll probably just close that hedge out. I'll actually just mark long right now. You have a good amount of selling coming in. I'm looking at another screen right now currently as well. Just limiting at around 28.9, marketed in half. See if I get filled down to 28.8. Bear with me. And just so you guys see what I'm talking about, here is the trade that I am trying to fill more of right now. So just marketing in a little bit at a time. Cool. So as long as 28.8 holds, so we're right above that, just to go back to that. As long as that 28.8 level holds, then I'm going to play for some kind of expansion higher. See if we get, so this is what you want to see ultimately. So something like this. Let's go down to even lower setting. So this is a tick chart. If we're doing it live, we'll go back to actually we'll just use a 1 minute so it's a little easier for everyone to see. So these moves are big now, so I got to scale this, fit this back. So you're getting a good amount of longs trapped in at the high now, but ultimately what you want to see is this, for what selling we have coming in, that the market is able to hold those pockets of selling. So far doing a decent job. Just going to go ahead and place a stop back within the structure. And we'll give this some breathing room. Sorry, the tick setting has to be readjusted. So there's your volume that I was talking about. You want to see volume continue to come in and the market continue to trade above that. So ideally, we don't break this little pocket now. So 28.96. Get more selling coming in at the low, build more volume below us, and then continue to move higher. So right there. flagging right now. And best case right now is us just popping back above 29. And you'll start to see people hopefully chase this. There we go. So what you don't want to see is you don't want to see a good amount of buying coming into the pocket and then getting trapped above us. So we want to continue to build value higher and build volume higher. So you got a lot of selling coming in right there. You want to see the market continue to hold these levels and trade up. There we go. Nice. Not exactly thinning out up above, but wouldn't that be painful if we just squeezed out sellers and then went back into the range? And you got a lot of, so you actually do want to see their open interest is getting in behind these moves though, because you want to see people coming into the moves and supporting them. It's not always the case that it's going to mean that it's a trap. So a good amount of liquidations. Looks like Bybit immediately fading the move. Let's see. Again, we're not really losing this level yet. You have selling coming in, but still trading higher. Let's see. I'm just going to go through the chat. DC says Discord sucks. Are you talking about my Discord? Listen, my Discord has no promises. I'm not in there hanging out. I just made it as like a dump of knowledge. So if you're in there thinking I'm going to be like in there all day talking, I made it pretty clear that I hop in there once in a while. It's the resource section that is helpful. It was really just because I have so many DMs that I get tired of answering. So I figured I'd put together one place for everyone to go and get all the information that I talk about. Bybit connection to CryptoWatch. I mean, they said that it's coming. They've said it now for a couple weeks, so funding is still negative on Bybit, going more negative. So here's a good example of building value in the TPO chart. So this is ETH. See how we've just broken outside of this last 3-day range. All right, so that's ETH. We'll put on ETH's footprint chart. So we had an imbalance move up. One sec. Too many ticks. Still too many ticks. So outside of the last 3-day range, so these are all highs that you'd expect to be taken, honestly. Slightly lower highs, poor high right here. But now we have an imbalance move up. You have this span of single prints, and then this little volume that is beginning to accumulate. Honestly, if you're looking at breakout opportunities and you're looking at areas to define positioning for longs, a lot of times it's this threshold where this single meets where the value is beginning to build in that area. So you have single prints, and then you have an area where you're getting a little bit more, and you have two columns. So ultimately for ETH, it comes down to you break outside this 3-day range. Your target is probably going to be back up above 19. And what you don't want to see is price begin to accept back below 1881. So that 1881 area, that's right here. So I would start paying attention to that level if we came back down to it, because a lot of times that's also a good area where you could refill. And this is the way that I will look at. A lot of times I'll take continuation trades in the ES and the NQ off of just the developing TPO this way. So especially if we've broken through a level where value hadn't established previously in the last few days. Yeah, no Discord signals. No babysitting either. I guess that's one way I put it, honestly. I said in the beginning, I said, I'm not babysitting this Discord. It's free. If I was doing a paid group or if I was doing something paid, then yeah, I would be in there nonstop. But I've made it free, and you still got to just do your own homework. So same thing as ETH, but now much wider in terms of overextension. Big move so far. This would be a double distribution through the level. So this is abnormal, right? Because we talked about the average 30-minute candle range for BTC up to this point was, I think it was 88. This move right here is 412 to 29,175. So that is multiples that, right? We're talking 5, 6x that. So that is not into a level, though. That's through the level. So this is a sign that there's possibly change that's occurring, right? Abnormal price action. Things have been boring and listless. You get a big move through a significant level. It just helps you get behind or possibly get behind the move. So ideally what you want to see is you don't want to see price be able to spend much time back in these single prints. So again, same thing with ETH. The cutoff for this single would be 28,975. So really what you're looking at, this is just like some vertical accumulation pattern where you want it to be that way, and you don't want to come back down. Ultimately, I think it's like right around this area. So that's where, well, no, we'll just look at a 30-minute chart because that's how we get the TPOs. So it's right here. So you don't want to break this 30-minute candle low. If we came back to this level and took it out, that's probably a good long opportunity, honestly. But as it is right now, the market is continuing to push up. And that long was a great idea. And that'll be my final words because that'll probably retrace it now. But I think that, honestly, I have, like I said, I wasn't filled completely. I was just tagging. I didn't even tag on a big position. I'll probably pull up that positioning up to this level and see if I can get filled there. So now we're funding was negative. We're starting to go back towards the positive area. Or excuse me, positive area. I can't even fucking talk today. Good amount of volume coming in. Nice. Good stuff. New high. So that is a new yearly high. We've just, I mean, this is a weird thing to say because this has been an uptrend for the year. But you don't really want to step. This is more a legacy thing. You don't want to step in front of new yearly highs. And those can continue to happen, obviously, every single day. But you don't want to be the first person to step in front of that break more often than not. So that, it's so marginal compared to where it is now. It's 29,193. But let's see if we get the pullback. Nope. Maybe I'll just be in a small position. I don't want to continue to buy up into this level. So this down here is aggregated open interest and liquidations. Hold on. Where the hell is it? There we go. I'll just leave this. Any questions, guys? I wonder how the tape is. Just checking out premiums. Coinbase still trading at like $40, $30 above everybody else in terms of futures. Here's our tape. All right, guys, I'm probably going to wrap it up. We're just over an hour now. See if this thing squeezes further up. Or pulls back a little bit, develops above 29, and then I'll get filled for more. But I appreciate you guys tuning in. I will be live again on Wednesday. And shout out to the sponsors, Crypto Watch. Check out the platform. It's a great platform, runs very smoothly. We just want to get all those other features up and going. And then there'll be no reason to use any other platform, honestly. And then Bybit as well. So those links are below. Hope you guys had a fantastic weekend. The CPI coming up is on Wednesday. That should be a good opportunity for some short-term trades. And yeah, that's that. Let's hope that this continues. Let's hope we just leave this range, honestly. Let's just get out of this range. The next big thing, let's say we just continue moving up. I mean, if we continue to move up, we'll go to BTC. I think a major FOMO level is basically being back inside of this upper half. I mean, it's compared to this structure, this is like a quadrant, and this is much larger. But if we're back inside of this window, so more like above 30K, and we're developing above there, I said a couple weeks ago, I shared just this. I said, even in markets that have continued to move down, you get bounces up to the 50% point. So, I mean, if we're back above 30K and we're holding that, it's more like 32, honestly, this level. If we're holding 32, and this means that a good amount of time has passed and we probably move sideways much longer, then I think you got to look higher, honestly. But again, that's talking about things that are not currently that we're not currently being faced with. We still have to deal with 30K, but let's hope we get there. All right, guys, have a great day. Thanks again to the sponsor.